All right, ladies and gentlemen, I hope you're having a wonderful evening. Not only is it Thursday in 2024 and we have a special live watch list, but my goodness, was today a wild day, and there is a ton of, oh wow, hi, that's me. And there's a ton of wild things that we need to talk about because a lot of people were confused why the data was good. Hundreds, if not thousands of stocks went green today. However, the market dropped almost 1% on the S&P 500, and the NASDAQ dropped over 2%. So I got a great lesson for you. We're going to go over what happened today. We're going to talk about what to look for moving forward. The CPI came in today, and it was surprisingly lower once again. Remember about a month ago, the day of Powell and the SEP, the CPI came out in the morning. That's only happened a few times in the last couple of decades here, like decade and a half, and the CPI came in lower. Everybody loved it. It was surprisingly lower. That is exactly what happened here today. Again, the headline dropped. It actually came in negative, and that was the first time that it came in negative, I believe, since 2020. Literally the beginning of the pandemic was the last time you saw a negative headline month over month go down. And then you also had the core drop, and that thing is chilling right now at 3. And then you had a little bit of yen intervention, but my goodness, even domestically, it was already wild, but the data had a big effect. There is something that we have to look forward at moving forward, and then tomorrow morning, we get the PPI, baby, and there's still going to be a little bit more to deal with, but Chatadonia! Before I say good evening, let me tell my guys watching the recap, I appreciate you. So you got your normal watch list. I got the keys. I got the plays. We're going to have a nice Q&A here, even the lesson, assuming we don't waste too much time. But here is the deal. It's going to be a little different. So if you're not used to it, the way that you get used to it is very simple. You go to youtube.com/The Trading Fraternity. Why? Because I am live every day. See, look, you remember I told you all those cop videos, bro? Look at this. I got 4, 5 out of 6. Oh, my God. It's all cops, Uncle Beats, and then a car. Oh, my goodness. But the point I'm trying to show you is that I am live, youtube.com/The Stock Market. Every single day the market is open. So tomorrow morning, we were live today for CPI. I won't be live for the PPI. But like I'm saying, man, get used to some of the live format. We'll see you on stream. It's free 99, baby. So let's get it. But now, bear with me, because you are going to get a little bit of live Josh here. And I got to say what's up to the beautiful Chad. What's up, baby? Good evening. Good evening, my friends. What's going on, Dago? Bopef, Walter, Star, Miller, Sankis, Yogi, Jerry, Wood, y'all. What's up, baby? Oh, how you living, geese? We hurting. Hey, it's okay. We only bounce back, baby. We only bounce back, okay? And they can't hurt you in the long term. It can never hurt the long term, except for 2022. And after training, extremely risky. Lose all my financial investment, lose all financial advice. I can on purpose only. Thank you for a wonderful day. What? Neil, what's going on, baby? Super takeoff. Tim Whitman in the house. Justin Franklin, Big Carly, Colin. What you mean thirsty? I need a water, actually. Speaking of your name, Nia, CJ, Nickas, baby, Brady, Shih Tzu, Sam, Battleborn, Gavin, Ray, Keeve. Oh my God, I'm not clapping because I got the water bottle. What up, Andre? Yeah. Let's go, Dirty Bird. Oh, Chris, you becoming a member on this channel. You don't have to, baby. What's going on? What up, fan? What up, James Cash? James Cash in the house, baby. Wow, my goodness. What up, Hush? What up, guys? Oh, man, I love it, man. Good to see you guys in the evening. I love y'all, man. Let's have a good time. So I am here live. I'm sure some people be like, is this live? Are we live right now? So you can help them out. Otherwise, in the meantime, get out a notebook, because I'm telling you what I'm about to explain to you right now. I pride myself that I broke it down into a step-by-step process, or at least I got bullet points, because I'm not going to lie to you, bro. And if you were there today on the stream, I explained this so many damn times, you have no idea. I thought the data was good. Why are we going down? I don't know why people talk like Call of Duty, UAV Online. Why is the market still going down? It's good data. I don't get it. Bomb armed. Double kill. Triple kill. Confusing as fuck. Oh, fun. Confusing as fun. Yeah. So this is I got a lot to talk about with this, man. And this is really what we went through today. And honestly, though, I applaud a lot of you because for real, man, I hope you know, man, I put a lot of time into the daily live streams as well as the watch list. And nothing makes me more happier than seeing some of y'all learn and actually taking the watch list and not being behind. Because what we witnessed today, it is literally that concentration that we have been talking about for months. When we're saying the market's doing a lot of effery, when we're going cash and chilling until the curve and uninverts, or we get real volatility shift through a policy, we've been talking about the path and how things have been. And literally the whole good news, bad news, good news thing. Like, bro, you saw it play out today. So was the data good today? Yes, it was. But the NASDAQ still dropped 2%. Why? Everybody wanted to know why. And here's the deal. The data was good today. It just was not good for the big tech stocks. And this is what you have to understand. First things first. I think this is the most important thing out of all of it. Do you recall lately, over the last quarter, maybe 2 quarters, where good news, bad news, and the whole bad news is good news, that dynamic didn't play out? Can you guys recall that? Does that sound familiar? You've had good CPI. I think even the last CPI before this, we sold off. Even on Powell, you sold off, and then a week later it went up. But even throughout the quarter, even when we had a little bit of downside in April, this whole idea of good news being bad news being good news, at some point, people were left there scratching their head. Why? Why did that happen? Did it happen today? Yes. Where you're like, wait, I thought good news was bad news. I thought bad news was good. Wait, it's inflation data. How come this isn't adding up with the market movements? Because the S&P, the NASDAQ, and the Dow have all been corrupted and polluted by heavy concentration in a select amount of names. So this is where the dynamic got confusing. The bigger NVIDIA got, the bigger Apple got, the bigger Microsoft got, the bigger Amazon. Again, even Amazon just hit $2 trillion for the first time, literally at the beginning of this week. Every time these other stocks got bigger, and all these other names, even like ARM, it's not just 7, but mainly some of those 7. Yeah, literally, we talked about it. The S&P, that 497 or 493 versus the 7. That was literally a watch list. Like this, unfortunately, this is the effect that happens. Because now it didn't matter what the data is doing, because these couple of stocks, if they make a big enough move, it's not going to move the NASDAQ or the Dow in the direction of everything else in the data. That is the problem, and that is literally what happened today. So here's the thing you got to understand, and this is where I think a lot of people, they've really got confused by this, and I'm very glad if you were prepared, because when it was all said and done, today you had 400 names going up, 100 names down, and then literally NASDAQ had 70% green, 30% red, yet you dropped 2%. And the data was good. First month-over-month decline in inflation. Rate cut odds are amazing. Bonds did good. The Russell went up 3%. And that's the crazy part, but that's, again, word to the first rotation with rate cuts that we were even a part of in the end of last year. So you had a majority of names going up today, yet the market dropped pretty big. So think about how we got here. Literally, you had it on many days where 400 names would go red. 380 names would go red. Everything on the Dow would go red, and the market would go green. So think about it. 400 stocks go down, 100 went up, the market still rallied. 400 names can go up today, 100 go red, and we could absolutely have one of your biggest drops. This is all because of that concentration. And the final thing, man, you got to think about it, and this is where we leave our conclusion and where to move forward. If people really believe the rates are going to be coming down and the data really is good and supportive, then people are thinking this might be a good time to get some of those rate-sensitive value names and sell your tech high flyers. What you saw today, this could be the start of a rotation, or it'll be another pump fake, or it could even play out kind of like December. Last time Powell, the first time Powell threw you a bone on rate cuts, remember, we were playing the Russell and all of that stuff. Literally, it popped up, had a little rally, and then it leveled out for about 5 months. So those are your three options here, and that's where we're going to be looking at moving forward. Do we actually witness a real rotation? Does the data now, do you really get a driver into small caps? Is it days like this where it's not bad and the market's going to move around a little bit because now people are going to be getting out of their big leaders that made them all this money, and they'll still hold up, and then now they're going to move in to all this stuff that has just been feeding on the bottom. And this is something I said it just a couple months ago when I was just telling you, man, like, only a couple of names are green. You're better off trading those because a lot of names were borderline crashing. And now, will this be the opportunity that changes? That's what we're going to be looking out for. So, that being said, does everybody get it? Or do you understand why you saw what you saw today? Because a lot of people were trying to say, I don't get it. The data was this. And they were really trying to fight the market or just messing with their minds. But I really think you witnessed all of this on the way up. Today, it just, it backfired in a different fashion where the market was really bullish. Again, the Russell closed up over 3%. There was a lot of names that went up today. There was a lot of advancing. Things were good, but literally Amazon was down 2.8%, Microsoft 2%, Apple was down almost 3% at one point, NVIDIA was down 3%, and those names are worth a lot. I think NVIDIA alone shed maybe like $186 billion in market cap. It was wild. I think over almost $1 trillion got wiped out in market cap from 7-8 names versus everything else that really got a bottom bid. Yeah, bonds were great. Everything related to the data moved accordingly. The bonds, the small caps, and that's why it was just like it left a lot of people thinking that it was going to be a certain way, but when it's all said and done, today wasn't a bad day. The data, it communicated what mother effers want. It was good news. It was good data, and the things came back, you know what I'm saying? But it's just like it wasn't the exact. You're better off playing single stock names, and really, like we talked about on the Tuesday watch list, bonds were probably going to be your best move, and they were. And then the Russell, it was just a matter, did you top ticket or were you already in it? So I'm glad everybody is getting it. I'm glad we're on the same page, but we still have a little bit more, my friends. We still have a little bit more. There is a new theme moving forward. Right when that data came out, lower inflation, and you saw this reaction, whether it was rotation or not, here's the thing you got to keep in mind. The theme moving forward is September rate cuts. And here's the funny part. Are you ready? September rate cuts are absolutely unnecessary. Now, that's not my decision to make. I could theorize a lot of reasons why they are not necessary at all. And, you have election and all these other things. And quite frankly, I mean, when it's all said and done, inflation is coming down. And it is starting to come down fast. And if you don't understand what's happening, it's a race. It's a game of chicken now. Which is going to happen first? Is inflation going to come down before the economy comes down? Yes, the economy will eventually come down. But if inflation comes down fast enough, they stabilize rates, the Fed won't fall behind. Otherwise, this is when you hear people, the most bearish of the bearish out there, or if they don't want to accept what's going on, what do you hear them say? They're like, oh, well, the inflation, growth is going to collapse. They're kind of on to something, but it's a race against the clock. You don't know what's going to happen because if inflation is dropping, then the economy could drop. And that's where you got to really be asking yourself, which is going to happen faster, or does one happen before the other? But that's what people are waiting for now. But that's where this fuels this idea that I'm telling you, is that the theme moving forward, even if you go look at the rate cut odds, it is now talking about September rate cuts, and they are absolutely unnecessary. But if the data supports it, the market is going to try to run it. AKA, if tomorrow's PPI supports it, bro, the rate cut odds for September are going to jump up. If the earnings are good and more inflation data, more soft data comes in bad, or inflation showing prices are dropping, people are going to build up those odds until the data pops in hot one day, and then everybody is going to panic in the other direction. You've seen it many, many times. But why I'm telling you this is because this is going to be the narrative moving forward. Every data will be put against this backdrop now. And now I hope you realize it. Just because whatever happens or not with the data, watching the SPY or the NASDAQ is not going to be an accurate gauge of telling you how people are responding to the data. Do you see why? You saw it today. You saw it the other days where the data didn't make sense and the market went up. So, unfortunately, pay attention to the data, pay attention to the bonds, pay attention to the rate cut odds moving forward. This will be the backdrop everybody is going to be putting it against. So we'll see how it plays out tomorrow, that PPI. Somebody in the chat just asked, will it help the Mag 7? It could, or even then, here's another thing. Maybe the Mag 7 sells off, but then those other like 90 or 80 names, maybe they get a little bit more support. You see what I'm saying? Because then in that sense, you're able to get it where at the very least, as long as they're not dumping, the market could stabilize a little bit. That's the thing you got to realize about today. Not only did you have like 80 other names contributing, but the big 7, they dropped a lot. You know what I'm saying? Like that, there was big drops on NVIDIA, Microsoft, Apple, and all of that. So that's what you got to think about. But yeah, PPI will help IWM. Russell, bonds, all of those plays, all of those are all in line in terms of slower or weaker inflation data. So, any questions, Star? I think you're asking about plays. We'll get to that in a second. But any questions about what happened today, what we're getting into tomorrow, or even some of this narrative? Because might I add, bank earnings kicks off tomorrow. Week after that, you're going to start getting a little bit more of tech. And then another, 2 weeks, you're going to get Powell at the end of the month. We just said the PPI will be able to affect the Mag 7. But more so, I'd look for maybe, does the Mag 7 stabilize the big ones and do the other ones stay chill? About gold and oil, we could talk about that after when we get into the place. Just we'll keep it focused on what happened here. Just today, tomorrow, understanding potential rotation or not. All right, we got some broad questions. Maybe we'll just get through the plays and then we'll do it. Do I find it concerning the yen gave back their gain? Is this concerning for their government since it took 7 hours? If this was the first time it happened, I would be concerned, but this has happened like 7 times now. So that's why they don't want to admit that they intervened or not. But it makes sense. That's why, in a weird way, the yen will go crazy once we cut rates, once the dollar gets their foot off of the neck. Because that's what's happening. The dollar has its foot on every global currency's neck right now. That's because, again, we're higher for longer and how strong we are being in a lot of things. Unfortunately, it's a very subtle dollar wrecking ball. And I think the only way the yen could really get out of it is their policy shift slowly but surely, but then they need the dollar to ease up, and they, because pretty much whatever they do that's productive, we're wiping it out with our higher for longer. Did you feel TLT was pre-snitching on this move? It wasn't snitching in the sense of like a rapid steepening, because you'll notice today in the last couple days, the yield curve steepened less than the week before. But the thing that did snitch, quote unquote, was the fact that the market rallied heavily and the bonds are still declining. And it even goes back to the theory I gave you guys about 2 weeks ago when I made my bond play. If whatever people are saying for a hard landing or not, fact of the matter is long-term bond yields are not really pricing in a hard landing. Therefore, they are cheap to a degree. All righty. I think we'll get into the broader questions afterwards. But Chatadonia, now let us get into the plays. So I think I'm starting with the plays that I'm looking at tomorrow, but I did make a play on this first one. Pfizer, they had good news on oral GLP-1. It's still a couple of years out, but again, that's what we wanted to see. I've talked about this for a while now, but literally we've discussed how, again, if Pfizer can get into a pill form, GLP-1, Ozempic type beat, that'll be great. But now why I made the play, not only does it have good news, not only is that if it gets above $30 and holds, it could break the downtrend, but there's also the ex-dividend, July 26th. So I think I'm early, but if the right news happens, I think this could be a good idea. Literally, it might get a little bit up, but then again, it kind of already moved in the last couple of days. But here's the other thing. Not only does it have Ozempic news, not only does it have ex-dividend run-up, but like what's the damn theme of the day right now? After the data, or let's say even tomorrow's data, is again lower PPI and people are getting hyped on inflation. Like, what's the theme, yo? Well, not earnings. Again, they do have earnings, though, coming up. And again, that ex-dividend. Yeah, rotation and value. So think about it. Pfizer, I definitely think if people, again, it's 6%. It's slightly above the yields prior to getting clapped on the last couple of earnings. It was chilling right around the Fed funds rate. So if people are really thinking, okay, maybe we should rotate into some values, securing a good yield, and then again, they're bringing up a thing investors would love. Again, Pfizer getting involved in a pill form of Ozempic, then again, it's going to take a while. Have you talked to your doctor about Lizzo? That's awful, man. That was a funny navigating the American healthcare system. But that is play number one. I'll go over the exact play that I made. And then play number two, ARC. So I still got an old play on this one. What am I holding? I think I got December options from the other CPI data. So last time we had good CPI. I have a September and October. They're absolutely cratered. The December one's not as bad, but still pretty worked. But ghetto rate cut play. I think silent but deadly if the rate cut odds go up. So this play today, is it going up? No. But if you start seeing PPI and a lot of other factors start to do that, then we might have something there. So I'd watch out for it. I do think ARC only if the Russell breaks out, only if the rate cuts start getting a little crazy. You know what I'm saying? So watch out for that. And then finally, play number three, bro. I had a talk today. It was after the bell. You guys, if you really, I don't know, man. If today frustrated you, if you're getting frustrated over the last couple months, you should go watch the end of today's live stream. But I think this is a really good play that I think some of y'all should not hesitate to do. The play is nothing. Again, we saw a different aspect here today. But remember when I said I got out of a lot of trades, I just started selling shit. I'm going to get paid to do nothing. My long term is absolutely killing it. In the summer environment, low liquidity, high concentration, this shit whole following a golden path. This is a one-way market, and even if it's one way, you could still get caught overpaying. And the problem is, you just don't be afraid to not move, man. You know what I'm saying? For real, do not be afraid. You're not going to miss out on a lot. And that's the thing. I don't think the FOMO is real unless you put that on yourself. Because right now, things are brewing up, bro. Literally, maybe right before the election, it'll get crazy. Maybe right after the election, then we get rate cuts if it's forecasted for this year. You know what I'm saying? Don't burn yourself out. If anything, I would load up right now, keep some oil in the lamps, and if you are getting frustrated, if you're not following along with this and it's not understanding you, bro, long chill and bill and long-term and chill, bro. But at the same time, you still get paid doing nothing. And I'm saying, let the opportunity come to you. And a lot of people, I don't know what you think when I tell you this, but the thing you got to really understand is that do whatever works for you, but be wise. And why I'm saying that is because you don't want exhaustion when the big opportunities arrive. Like I'm saying, we are entering into an election, a very contentious election. Things are going to either get confirmed or denied in a big fashion for fiscal policy. And then you're going to have the rate cuts right after. You know what I'm saying? Like, these two events are massive. So do not get tired out or blow up your shit right before it's there, especially when you're not having, it's not as if this market is tempting. All there is 400 names that are deep value, that are not sexy, and they don't get moves, or you go and play fucking NVIDIA. So that's why I said just make your decision, but at the same time, these markets going back and forth, don't be afraid to not make a move. And I'm not saying this as if be scared. I'm saying this as you have two big battles right around the corner. That's literally the simplest way I could put it. You have the battle of the election, the battle of real policy change and rate cut. So yeah, why don't exert yourself on this battle that really it's unless you're in NVIDIA, unless you're getting, you know what I'm saying, heavy on that, like it doesn't make sense. At this point, we're getting into the later stages. We'll see what earnings does. You know, the earnings, we might be able to get small, cheap plays with high upside. I'm all about that. But I would not expend troops in a battle that doesn't really give you a victory. And what I'm saying is that the two battles you really want are these big events that are going to really change things and then potentially set up the next 4 years. So you want to be ready for that, okay? You know, I think it's so don't. It's you don't no shame in preparing for a bigger move, my friend. And I think some of you will be aptly rewarded if you could heed the good advice. You know what I'm saying? So good luck, my friends. And now, speaking of not making plays, I still made plays today. And honestly, though, it's again, it sucks because the plays that I made today, they whacked me on my day trades. However, like I was telling you guys the other day, the trades that I had in advance, those are they did amazing. The old gold, the old bonds, they did absolutely great. I did add to the Pfizer to go for that dividend theory and everything going on. I grabbed 100 of the 34 contracts at 5 cents. I think I overpaid. So here's the deal. If this contract, I'm going to try to make it free as soon as possible. But if this contract don't go free right away, wait till I'm down like 60 to 70% on it. And I think these will be a good snag, assuming the stock hasn't made any type of pre-divvy run-up. And then depending on how the value rotation plays out. So this play I think is either going to go right away and I'm going to make it free, or I think you'll be able to get this play a lot cheaper. So no FOMO on that one. I sold out of my gold for $2,500 profit, which is crazy because I had micros. So it was just a fat gain over the last couple of weeks on that. I would go green and red, green and red. I remember I was up like $1,000 and then went negative, and then it popped up today. And then I went for the ES and NQ long. I got clapped, even though it was already down 1%. It just kept going. That's how I got into my bond plays. But I think I'm going to be able to ride those out and play the data. And the way I'm looking at it, I got the longs there. I don't think I am a little bit more to the high side, but I think the bonds will make up. And that's why I did it. Whatever, even then, I got clapped on ES and NQ, but I made really good money there on the bonds. I secured a bag with gold, so kind of balanced it out, but was able to actually walk away with a net positive on there. But that's what I'm holding now, and then that's it. And I have an economic lesson, assuming you guys don't have too many questions. We could always punt on the economic lesson, and I could read you the intro of chapter 8, and then we could go from there. But you tell me. You tell me. What do we got, baby? Any questions? Hot girls invest in the long term. Hey, man, I think it's statistically proven. You know what I'm saying? So I don't know, man. You got the long term. Can't you drive a stick shift too? That's God bless you. God bless you, Habibti. God bless you. They don't know. They don't know manual life. Actually, I haven't driven a manual in a minute. You're the GOAT, bro. God is the GOAT, bro. God is the GOAT. Finger to the sky, bro. You know that? I don't even want to hit y'all with a philo. But man, I feel blessed, bro. Feel blessed, baby. Feel blessed. Okay, you're all blessed, baby. But you got to feel it. You got to feel it, man. I think Palantir is an interesting company. We bought it at IPO at $10. I don't know if people remember that. But I think it has a lot of hype. I think it'll be around in the future, but I just wouldn't go too crazy on it. I've seen a lot of shit like that. In a weird way, I feel like Palantir is going to kind of be it's going to be like a MSTR in a weird way. I don't know. Maybe I'm dead wrong on this. But in the future, I feel like this is our version of MSTR in a weird way. But he don't raise money that crazy, but I think in the future he will, and I just don't think we really know. I know you're going to tell me government contracts and all that, this other shit, but when it's all said and done, I think Palantir, it's going to be around for many reasons, but like I'm saying, I don't know if I would be putting all my money into that. Just don't go crazy on it, is the way that I view it. What do they do? If I told you, I'd have to kill you. You lost 250 on gains. We got faith. Amen. And honestly, make shit free. You know what I'm saying? That was we had homie, little 15-year-old. He just was like going ham on the fucking stats, and he was loving it. I'm sure he learned something. It reminded me of the first time I saw 2 lines cross, and I was like, holy shit, you just buy when the lines cross. And then that didn't play out well. I was young. But I told him make it free because you never know. And especially, it's not even then, like the market right now, this heavy concentration, it could clap you and then you'll still hit the play, but you'll hit the play with less time, and then that means less gains. 1-2 days could F it up, you know. So just next time you're in that position, just keep in mind making it free. You know, unless it's something really tied to something broader, or you have less, you know, damaging factors of time, that's it. Just, it's very simple. The closer you are to expiring, the higher the gains. Just think about making it free. Sell a little, make it free, use the ghetto spread. All these things can protect you. Good evening. Good evening. You all, I don't always make it free, but I've, you know, like I'm saying there, just a good rule of thumb. The less time you have, the more likely you should make that play free. Simple as that, right? Especially, and then you have to think about it. Is there an event around the corner? Anytime there's an event, there is event risk. So meaning that event is both raising the value of your assets, your options, or it's going to hurt it right after, and then it might kill it even if nothing happens. But the just closer you are to the expiration, the more likely you should make it free. I don't know. Debt ceiling talks, I think, are around the corner, honestly. Your options are buying in September and beyond. You like the option trading Buzz Lightyear. To September and beyond. So that's good. A little bit more time so you could get more flexibility. But at the same time, it's just whenever that time slowly drips away, you got to do it. Buzz Leap Year. Oh, my goodness. Wow. Buzz Leap Year. To January and beyond. How much gains do you think Russell keeps from today's pump? That I don't know, because Russell is notorious for either giving it back right away, or it's gonna have a couple of bursts and then it'll level out. So, but I think today was good. Today was continuation of what happened in December. And remember, we hit that shit right on the head, and that was the first time Powell was like, rate cuts. You remember? So that caused a lot, but like it's volatile. It's a bumpy ride. I remember I went break even on that play several times before it popped up to positive 15,000. But it would go green, then red, literally just like here. Remember, it would pop up crazy, give up some of it, have another pop. You think you're going to go crazy, give back all of it, pop up, give back even more, and then 2-3 months just slowly grind up, hit a new high, sell off, pop right back up, and then do that. So it's going to go in bursts. But it was good for that trade. The idea is definitely there. The 1.3. Well, remember when I did that calculation. So let's go back to the SPY. So when I did that calculation, the SPY was at what? I think I did it after close. So 1.3 from here. So from 55.78, you could go 1.3. That's what I priced in that day. And then next day it went crazy. Oh, you can't. Oh, man. You didn't even see my Russell thing? Oh, damn. My bad. Yeah, I was showing you guys the Russell for homie. Remember, that was that December that we hit on the Russell. And like I'm saying, those were the pops. It would hit the highs, then come down, do that just several times. And that's why it was kind of a tricky play. So remember, like literally 2 weeks, 3 weeks after the first Russell thing, it did go up a little bit higher after that run, and it held, but then it gave all of it back. You could have double dipped and got there, and then boom, 4 days, 5 days later, you're right back up. Yeah, it did go 7% in 2 days, kept going, and then 2 weeks later sold off, and then did it for another 2 weeks at a time. So that's what you got to be mindful of. Oh, I forgot I shorted the Russell today, and then I closed it. I made like 100 something or $200. But what was I showing you after that? The SPY. So that 1.3% we priced in was from here. about 55.78. So we could do the same thing on the SPY. I'll just make it easier for you guys. So 55.82. Wait, is that the 555.82? Times it by 1.3. That's $7.22 in either direction. So let's type 722. So literally 555.82 plus 722, 563. Ironically, the top of today. Can't make this shit up. Okay. And then 5582 minus 722. 541. Oh, no, I did the wrong number. So 548. Still a lower number. So pretty much you could go either back down to here, fill the gap from literally damn. Is that a couple powers ago? No, I'm tripping. But from last Friday, you either fill that gap or you go right back up to the high. So that's literally what was priced in from Wednesday. That was before yesterday and before today. We had the high-end number priced in, and then now there's literally 7 points of downside. That doesn't make sense, though. I feel like 550, I don't know, 548 seems so low, but then again, I guess that is 7. That 1.3%, I did the option pricing on Wednesday, and I brought it up on the watch list as well, and I talked about it, and we did the at-the-money price, and we just factored it in to say, I was like, it was interesting because at first people weren't hyped up, but then this became a pretty hyped event. However, 1.3 used to be small, but lately with the lack of volatility, 1.3 was kind of high. So I just kept that number in mind, and that's why even then you ran up 1% the next day, and then we had today, but it never breached that 1.3. That means all of the options on Wednesday were priced for this range. So if you bought that a call on Thursday or Tuesday, whatever it was, and then we ran up and then you didn't sell after today, you're getting clapped just because the market maker priced all of this in. And then same thing even to the downside. If we go to 548 tomorrow, those options aren't going to pay you out as much as you think. Does that make sense? So think about it, because even if you bought it here, there was that premium from the day before. And then if it goes down, those options will go up, and then it makes one big bounce and then chills anywhere like 550, even at 555, then everybody's dead. Ta-da. Good tomorrow on PPI will go down. Maybe rotation keeps continuing. Then earning. That is something you got to keep in mind. It is earnings right around the corner. This could just be a wild pre-earnings setup, but here's a line of logic I want you to be on the lookout for tomorrow. It is what happens if the rotation continues, but the sell-off in the big 7 is not massive. So think about that effect on the market. I want you to watch for that tomorrow. I'm not saying it will happen, but I don't want to be so one-sided, either all in, all out. You know what I'm saying? Keep in mind how you could have a certain effect if this big 7 just stays stable. Think about it. Apple dropped 2-3% today. If it just moves 0.25%, if Nvidia moves 0.5% instead of moving down 3 or 4, up 3 or 4, you know what I'm saying? And then that rotation continues, that could still happen. So that's what you want to be on the lookout for. Do you get stability and then the other names go up? Or maybe the big 7 drops a little harder, but then the other 80 names give you more support. That could kill all contracts too, 100%. Yeah. I mean, there's many ways you could go about, even then, like, F all the bullshit, you know what I'm saying? Like, that range that was priced was already so big. These market makers are already positioned great. You see what I'm saying? Like, you don't even have to do anything crazy. I'm just saying watch out for the theme of what we've seen and if we really get those rotational elements. But the market maker is good. They're already in the range. We do nothing. We gap up. We gap down. Unless it hits back up to the high, I mean, everybody is accounted for. Ta-da. Bank earnings, I'm not expecting much. I'm really not. I do think the downside surprises will be juicy, but they're not supposed to happen, and then they're all at all-time highs. So they're either going to do really well, or they might just be, it might be cuck central just because the bar might be high. Even if they do good, they'll just dance around, and then that's it. And then the banks will take off once the other earnings take off or die. So banks might have a 2-week delay, but honestly, I just be on the lookout for any major downside surprises. And if you played any of those, you're gonna effing love it. Pre-earnings run up on ARM can affect NVIDIA. I agree. That's a good take. Just got home, baby. What's good, man? Do you have any formal education or self-taught? I mean, I didn't study finance. I did study political economies. I don't have a degree in finance. I have a literal degree in philosophy and a literal degree in political science. So who would have thought the neutral guy who makes all the political jokes? You know, technically I'm a fucking scientist in politics. It's dope. But I do have almost 20 years now of experience in financial markets, which is effing wild to say, but I started really young. So that goes a long way. Max, and I think we saw something on that the other day. China's just really bad right now. It's still bad. They banned short selling today, and that helped out a little bit, but at the end of the day, it's not really I think it's just like Japan. There's big things boiling in Asia, in those countries, Japan and China right now. But the dollar is the problem. I don't think you're going to see any real movement until the Fed stops. Everybody is just getting out of the way of Powell, because if you try to fight Powell, you're going to lose more money than not. Like, you can't do it. And I'm not talking traders. I'm talking about countries. Your intervention is useless if Powell is doing whatever he wants. Even for China, you can't stop your economic decline and throw the kitchen sink until Powell in America is stimulated and ready to absorb it. You know, so unfortunately, it's not really giving them the situation, but it's bad out there. It's still the same very poor situation that has been occurring over the last 2 years. When you said September rate cuts are unnecessary, are you thinking it won't happen when then? Well, I've learned anything can happen, and maybe there's rate cuts because of a surprise, right? So that's all in the deck of cards, but I just think it's unnecessary because, one, we haven't got aggressive on December rate cut odds. Two, you're running out of time, so there's only literally less than you could count on your hand many meetings of the Fed by the end of the year now. So if they wanted to go in and do all of that, I mean, you only have so much time. So you have July, they're not going to do anything, and then you're going to skip August, and then it's September. So there's your moment to do it, depending on how many cuts you want to get in by the end of the year. And then simply everything is working for Powell. The data's coming down. All of it's dropping. Why the hell? Just because the market wants it, or you're even getting more confirmation of data. As long as inflation is above 2%, there's no need to go ahead of time and then risk yourself going either too early or even worse, sparking the political debate that you did it for politics. So that's why. But I think anything's possible. I just, I vibe with it and I'm paying attention, but I'm not in the game of predicting it. I don't think you can. Powell don't want you to. But you'll know right when it happens, and there'll be a little bit of a delay, meaning it'll happen right in front of you, and you don't need to worry about front-running it. All the time you dedicate to educating others, man. Sit back and chill, enjoy it, bro. I appreciate it, man. But I get excited, man. You have no idea. Like I said, I think the last couple of watch lists, and those of you who've been real locked in, I think you understood a lot about today. I don't think you're left scratching your head about the markets, and I even think the broader picture is coming into better focus as well, because you're watching this shit play out now, and you're experiencing it on both sides. So I think it goes a long way. Makes me happy to see. Makes me very happy. We did talk about IWM's move today. Yeah, that was the rotation, and those were the rate-sensitive stocks that really benefited off of the data. All right, let's do this. We got good questions. Let's just start the intro to the lesson, because I'm really excited about Chapter 8. You guys have no idea. So this is from I'm just going to read you this part, get you a little bit of a starter in there, because it is a long first part of the chapter. But this multinational corporations, baby, chapter number 8. So we are like 160 pages into International Political Economy by Thomas Oatley. And this one I think you'll like. I haven't read the updated version of this, so I'm excited to see what he says. I'll interrupt with my opinion, but it's an intro. I think it'll just give us a little bit of a good intro talk. Hold on. So, multinational corporations and the global economy. MNCs, multinational corporations, highlight in a very concentrated fashion the tension that arises when economic production is organized globally while political systems remain organized around mutually exclusive national territories. MNCs often generate tension because they extend managerial control across national borders. This managerial control enables firms based in one country to make decisions about how to employ resources located in a foreign country. Contemporary discussions surrounding the emergence of Chinese firms as a major source of foreign investment in sub-Saharan African economies illustrates these tensions. While African governments have generally welcomed the gains that Chinese investment in infrastructure, natural resources, and manufacturing brings to their societies, many local observers have raised concerns about how Chinese firms treat African workers and safeguard the environment. A major American newspaper even went so far to title a long story about Chinese corporate investment in Africa, "Is China the world's new colonial power?" Though investment by Chinese firm raises additional questions about the possibility of state control of these investments, this additional dimension sharpens the issue rather than creating it. Because MNCs operate simultaneously in national political systems and in global markets, they have been the subject of considerable controversy among governments and among observers in the international political economy. Some consider MNCs to be productive instruments of liberal economic order. MNCs ship capital to where it's scarce, transfer tech and management expertise from one country to another, and promote the efficient allocation of resources in a global economy. Others consider MNCs to be instruments of capitalist domination. MNCs control critical sectors of their host economies, make decisions about the use of resources with little regard to the host country needs, and weaken labor and environmental standards. Above all, that these two divergent perspectives agree on is that MNCs are primary drivers and beneficiaries of globalization. This chapter and the next examine the economics and politics of MNCs. This chapter focuses on a few core economic issues concentrating these geographically far-reaching organizations. The first section provides a broad overview of MNCs in the global economy. We define what MNCs are, briefly examine their origins and development, and then examine rapid growth over the last 30 years. The second section examines the standard economic theory developed to explain the existence of MNCs. This theory will both deepen our understanding of the differences between MNCs and other firms and help us understand when we are likely to see MNCs operating and when we're likely to see national firms. The final section examines the impact of multinational corporations on the countries that host their foreign investment. We look first at the potential benefits that MNCs can bring to host countries, and then examine how MNC activities sometimes limit the extent to which host countries are able to realize those benefits. Wow. I love this topic. So, it's going to go over a lot, and I'll tell you, this is just the appetizer, not only for this chapter, but again, we have like another 10 more chapters to go. So I'm giving my opinion now. I will give you what I think is the summary, but my call to action, whatever we go through in the chapter, remember it because it's going to come up at a later time. Why? Because over the years in politics, MNCs are the new government, in my opinion. So, and as history and crisis has showed and other advancements, MNCs, they are the Kermit frog in the background. always sipping their tea. So that's why, keep that in mind. But what this chapter is going to go over, very summarize what it's talking about, is just saying you got to think about it. Corporations are in a very weird state because they are executing their plan, but they're doing it across borders. So think about it. You have these companies, Johnson & Johnson, Procter & Gamble, Kimberly-Clark, ExxonMobil, Pfizer. You think most of the names, even Starbucks, and they're executing their business plans and going about their own, benefits, but they're not doing it just in one country with one nation and one law. They're doing it in multiple countries, and that brings in a lot of problems as well as a lot of benefits. So a lot of people, like it's saying, we'll go over the criticisms, who likes it and who doesn't, but here's the one thing everybody agrees on. The biggest promoter and benefactor of globalization, this is a fact, is multinational corporations. This is not opinion. This is a fact. This is what it even said there. Literally, above all, the two divergent perspectives agree that MNCs are the primary drivers of and beneficiaries of global economics. So why? You got to think about, like I said, they're there to benefit themselves. And they are benefiting in all these countries, and they move money, capital, labor. Sometimes it helps people. Sometimes it hurts people. But at the end of the day, they are the ones that are saying, yeah, we need more globalization. They want to globalize so that they can continue to exercise their will in whatever territory, low-key, boundless. And then at the same time, the more and more trade and globalization and liberalization of trade that we have, they're going to benefit the most off of it because they are set up. They are providing the capital, the infrastructure. They're the ones investing, literally, just like the last lessons. Think about it. These multinational corporations, these are the new landowners. These are the new agriculture. You know what I'm saying? Back and think about it. What was the economy pre-war and even post-war, before ISI, and even after ISI failed? It was these landowners in agriculture. They dominated, but then they were only local. These MNCs nowadays they're the agricultures of the world. They're, you know what I'm saying? Their field isn't in their location. Their field is everywhere now. They could grow and they could sell and do business wherever they want. So how do we stop anything? They're basically unstoppable. They're not, because that's the beauty. Because the more deeply integrated globalization gets, the harder it becomes depending on the political institutions. But that's always been the irony of all of it. The government, and that's why government blames the corporations. Corporations blame the government. The government in one fatal swoop can always clap them. Not just our government, but any government. That's the thing you got to realize. All it takes is one, you can't do this. You can't do that. Think about it. Obama single-handedly killed coal. Literally, governments, nope, you ain't selling no more e-cigarettes. Nope, you can't do this. Nope, that's bad. Nope, sorry. Oh, we're taxing you. Nope, clawback. Nope, you got to do this. So, unfortunately, the government, and whichever government, not only our government, but everybody, they would be the ones that would be able to do it. Ta-da. That makes sense, though? So I'm excited, but that is the beginning, my friend. We'll get more into this, but it'll be a fun time. It'll be a fun time. Understandable. Any other questions, though? We can talk about whatever. The lesson, the intro. Anything else? That's it. I mean, maybe I kind of want to play a game of 2K. My girl says she gonna make me dinner. I don't think she here, though. The more you learn about economics, the crazier it gets. Yeah, it is. It's wild, though. It's fascinating. But also, too, don't ever forget, it's so much easier. You think way faster than shit happens. That's always been my big lesson that I've always learned. And sometimes I still have to learn it over again. But, I could theorize and understand stuff. And I could tell you, I could put it on paper exactly what's happening. But it could take you could think of that in a day, in an hour, and it'll take 10 years to play out. and it's so slow, especially if you watch it every day. That's the thing about it that gets really, really clapped. You just got hooked on it. Yeah, bro, every day, man, every day. We're going to have some of these we've been chopping this book up, bro, little by little, man. How do you eat an elephant? One piece at a time. What up, Big Mike? That's what he said on the real estate call yesterday. I liked it. The possible outcomes like deflation, hyperinflation, and what needs to happen. I mean, yes, but just go watch Mr. Robot in a weird way. Because, that's the thing. I'm saying, we could go over a lot of stuff. But, don't be careful that you don't get into watching fear corn. And just sometimes, we like to go over things, and it's, fascinating, and it's kind of entertaining. But just make sure that, all of those, hyperinflation, deflation, I'd argue most people in here haven't even been alive to witness any of those things. And right now it's still a slow, lonely road until we even, we're just dealing with inflation still, normal inflation and the effery of everything else. Mars, 25% of your portfolios on them. I think shipping companies are great, but with anything, I would just be careful going that heavily concentrated in one stock, especially if it's not it's not even a growth stock, but I don't have a problem with them. I think they got a little bit of risk, but not too bad. Biden will not leave unless they tell him he will not win. Well, I don't know. I think Biden in his little speech, big boy speech, he did bring up something, which we brought it up today. I think a lot of people, a lot of these Democrats and senators, they have to go for re-election. So I think some people calling pressure on him, they just have to, they just feel like their constituents aren't down or that they can't win with Biden. But I think they're just trying to save their political ass more so than actually, because it does seem like he is very, very down with staying. It sucked. He had his gaffes again. It was not a good, I think he called Zelensky Putin. He called Kamala his vice president, or he called Donald Trump his vice president. I said the actual thing is, you know what I'm saying? So it was kind of, it was the same thing, sadly. Just, now everybody's hyper focused on it. You know what I'm saying? We've been cracking jokes for 3 years, but now every little one, and dude, I just kept laughing because I'm like, man, he does it it's such a we joke about it so much with the voice, but he kept doing it. Anyways, and Hamas, and anyways, and I'm not even supposed to be anyways, but then I'm not supposed to anyways. He loved it anyway. Dude, that was just crazy. I was like, man, that's a joke, bro. That'd be in the song, bro. Yeah, I don't think he's gonna back down. I do think he's gonna stay, because I don't think, I think he still has a chance of winning, whether you like it or not. Don't get caught up in the hype. I think this is just the people who are trying to appease their constituents. Those are the people turning on him, and I think the media might be playing along for the right amount of donations, or the right, you know what I'm saying, the right amount of ad spend. But like the French elections, 100%. Yeah, it still speaks volumes, but I don't think. I think he's gonna be on there. Do you think he could last 4 years? Dude, it doesn't matter. Dude, I quite frankly, every time I look at him when he's listening to a question, I don't think he's going to last 10 seconds. You know what I'm saying? And then he somehow does it. So that's not really, it doesn't really matter. the thing somebody said, I think it was NBC, and it sucks because it's just like to some degree, if we are talking about homeboy's cognitive ability and can you last this, like it's kind of already effed. You know what I'm saying? Still in the long end Q&ES, getting worked on him. But yeah, if he died, I mean, the market would be bad for a little bit, but then it'll come back. Don't underestimate the resiliency. And there has been a president in the past who passed away while in office. I think there would be a short-term Kamala crash, and then it would rip. Because you guys got to. I'm gonna tell you right now. If Biden wins, just buy real estate and hold on to your stocks. Yes, I know it may not click for some of y'all, but the fiscal spending spree was just beginning. I don't think you understand. So that's why, and why do I say that? Because you're saying if something happened to Biden and then it became Kamala, people would panic initially, and then homegirl is going to open up the floodgates. They're going to ESG that shit. They're going to be like, man, if you 10% Cuban, we going to give you $1 billion. If you build an AI EV factory, they're like, okay, everything. You're going to see more, just like the first time. Anytime free money float around, it'll go crazy. Yeah, they're going to give out free cars and shit, like whatever. But it'll just be a lot of, I don't doubt the spending. And if you get an unchecked spending, that's the beauty. And I don't think a lot of people understand it, because you got to realize it's like, well, the counter to that would be like, well, wait a minute. If Biden wins and is going to spend more money, wouldn't that reflect bad on the Democratic Party? No, it would not. Why? Just like you saw them do right now, because then you could go dump all of this money and spending into anything you want, and then at the end of it, you could just blame it on an old guy. And then you come in with the new young guy and say, look, that's not us. Yeah, no, he did that, not us. Ta-da. And then you'll have maybe 3 Democrats in a row if you play your cards right. So that's why you got to think there's an incentive to keep young Biden, to keep him in there, because then you could open up the fiscal gates, no reelection risk, and you could still have the opportunity to bring in another new young guy or gal after dumping whatever billions or trillions of dollars. So that's why I'm saying, though, you could get mad about it, but if Biden does win, there is a way to get rich off of it, especially if he does what I think he will do, which is spend a lot of money. Same thing goes for Kamala. Bank on in this here. If Donnie wins, unfortunately, the market crashes. It may not crash, but I don't think assets are gonna go up as fast. And then I think you'll get a very if he goes full fucking, crazy biblical right wing insanity and does anything like, you know what I'm saying, just goes hard in the paint on restrictiveness, you'll get a tax cut, but energy will rip, but then you'll have to deal with fucking tweets and tariffs moving you around. But I think you'll get I think assets will be more stable, if not go lower, rather than be unchained in terms of value. And the AMA man, have a good one. I think I might wrap it up here too. Moon with Trump. I'm like Moon. LT, the best law game, no matter what. Amen, man. No matter who is president. We have the threat of firing Powell. I don't think it's a real threat. I think that's media bullshit, to be honest. That's it. Trump's not that dumb. I don't think he's that smart either, but I think it's just, easy. Like, think liability. Like, why would you fire somebody who could, and make it a big deal when you could just let their contract run out, at no cost to you? And honestly, I mean, low-key, whatever's happening now, Powell's doing what Trump would want anyways. It's not like Trump complained about Powell raising. Oh, wait, he did. You know what I'm saying? All Trump wanted was low rates. You haven't had power since Monday. Oh, the hurricane? I was like, I thought you had a drug addiction. I'm like, what's power? Are you okay? Nah, I'm glad. Good to hear, baby. Good to hear. I didn't get it at first. I live in California. We just have piss on the sidewalks. And you might get stabbed for your Rolex. But other than that, it's beautiful. I'm addicted to philo. How you doing? We about to wrap it up, man. The California dream. All right. We are live, but it's going to end right now. Chattadonia, it is bedtime. Enjoy your day. Be safe. Be rested. I'll see you in the morning, baby. Thank you for your time, bro, especially y'all locked in, man. I'm proud of y'all, man. So let's get it. Let's have a good day tomorrow. Enjoy your sleep and know you blessed, baby, okay? You are so blessed. You have no idea. You got to start really thinking about it, man. You know what I'm saying? But I love you, Chad. Finger to the sky. I'll see you in the AM and Horna. Let's go. Oh, wait, where is it? Where's my...